45,000 realtors have left the industry since interest rates started going up. I'll dive into that. Plus, how many of these realtors will jump back into the market if interest rates start going back down, which is a very likely possibility now that inflation is decelerating. And speaking of deceleration, we may be seeing a bit of a cooling of the market week over week. So I'll talk about that. Plus, take your questions as always right here, right now on Live at Lunch. I'm your host, Lambros Demos. Thank you so much for joining me on this beautiful sunny Wednesday afternoon. So right off the top, this article, I'll call it a bit controversial, came out in the Toronto Star a few days ago. And it's got the real estate community a little bit up in arms. A lot of people are questioning the numbers. They're calling it bullshit and et cetera, et cetera. And even, I don't know if the numbers are true or not. They may not be true. But the point is, I don't see why a lot of agents are taking this personally. If anything, this is good news, both for the industry and for the general public. Because in my opinion, real estate or realtors, the market has been oversaturated with realtors. Okay, let's be honest here. We've got approximately 100,000 realtors in Ontario, and I mean the article points to a higher number, whatever, but we'll just take the lowest number that other people have thrown out here. So let's say there's 100,000 realtors licensed in Ontario. Okay, the population, the overall population of Ontario, is 15.5 million. Okay, now not all of them are going to transact in a real estate deal. I get that. So let's say just take the ones over 25. About 12% of them are under 25, so we'll eliminate about 12% of that 15.5 million, leaves us with about 13.5 million. Okay, so out of 13.5 million, divide that by the 100,000 realtors in Ontario, what do you get? About 135 people per agent. That is not a sustainable market per agent for people to conduct business, in my opinion. 135 people, that's nothing. Okay, that number only shrinks when you get into the GTA market, where most of the agents are clustered and most of the population is clustered. Okay, so the GTA has approximately 6.5 million people. Again, looking only at those over 25 and over, we're looking at about 5.7 million, let's say, round it up. And Treb says there's 73,000 realtors licensed in the board. So we divide 5.7 million by the 73,000 realtors, that comes to about 78 people per realtor. Okay, so, and then you tell me that the market is not saturated with realtors when there's one realtor for every 78 people. That's a ridiculous number. So it's no wonder that half of those 73,000 agents do one deal or less per year. One deal or less. Okay, there's a lot of part-timers in there. There's a lot of people who just got their real estate license because they saw an opportunity to make some money as the market was going up. And maybe those are the people that left the industry since then when the going got a little tough, right? So a lot of fair weather agents coming in, thinking it's easy money. Once things start getting tougher, they leave the industry. So again, I'm not at all appalled by this article. I'm not taking it personally or anything. Again, I look at it as good news, and that's the way we should. And for the general public too, because it doesn't serve the public well when you have these inexperienced agents coming in. They don't know what they're doing. They're just grabbing any deal that they can, even if it's out of their market. And I'll give you an example for that, because I think agents or inexperienced agents are partly to blame. And inexperience has nothing to do with number of years in the business either. Let me clarify that as well. It also depends on how many deals you're doing. I just mentioned that a lot of these agents are doing one deal or less per year. So, if you've been in the business 10 years, only doing one deal or less, that's only 10 deals under your belt versus somebody who's doing, maybe 20, 30 plus deals a year. Now they're accumulating that extra experience. But anyways, that aside, I think these inexperienced agents are partly to blame for the huge spike in real estate prices since the pandemic started. And I'll give you an example as well, because early in the pandemic, I was selling a townhouse in Mississauga, and it was going into a bidding war. We had priced it slightly under market value, got about 7 offers, if I'm not mistaken. 6 of those offers were slightly over the asking price, so maybe $20,000, $30,000 over. And then this one offer comes in at $90,000 over the asking price. Absolutely ridiculous. What's the seller going to do? Obviously, they took it. It had no conditions, nothing. It was a clean offer, 90 grand over what they were asking for. So the seller took it. But I cautioned her, because when it comes in that high, there's a chance it may not be appraised. And I did a segment a couple of weeks ago on what happens if the property is not appraised, because the lender will only give up to the appraised value in loan to value, but not to the purchase price. So that was one of the things we had to be aware of. But the seller was comfortable with that because the buyer had a good financial covenant, made sure that they had a large down payment, et cetera, et cetera. So it was a safe bet for the seller, right? And turned out there was no issues at closing, it closed fine, everything went on. But that set a new benchmark for prices in that townhouse complex. Nobody had heard of a price that high. And all of a sudden, now other houses in that complex were going at that price, right? Because we had just single-handedly elevated the benchmark price for that townhouse. And that spreads like wildfire. Once it's like a contract in the NHL or something, whatever player signs a new deal, say Austin Matthews signs a record-breaking deal, the next guy is going to want similar money. What's Connor McDavid going to get? What's Connor Bedard going to get in a few years if he continues, to be a superstar, et cetera, et cetera. So that's how it works, because we set a new benchmark, and that led to prices continuing up and up and up. And that was happening everywhere. I'm sure it was happening in other places as well, because we saw double-digit price increases month over month. Absolutely unheard of, absolutely ridiculous, absolutely unsustainable. At one point in Brampton, it was 33% year over year increase in home prices. How is that sustainable by any stretch of the imagination, right? So, and that, again, I blame not only realtors, I blame FOMO, right? Fear of missing out, because people saw which way prices were going, so they didn't want to be stuck in a position where they would never own a home. They want to take advantage of low interest rates. That's another reason, right? We had dirt cheap interest rates. Money was practically free to borrow, and then you throw in the mix these inexperienced agents who just throw anything against the wall and see what sticks. And I know that for a fact because I belong to a number of Facebook chat groups for realtors. And I remember back in those days, people were just saying outrageous comments, like stupid comments. They're saying there's no need for evaluation anymore. You just go in with any price that you want, and it's absolutely ridiculous how their inexperience shows through these comments, and the lack of service to their clients. That's not doing anybody a favor. You're not looking out for your clients by doing that. Just give them a number, just whatever number, 100,000 over or whatever. It's just there's a lack of due diligence there. Huge irresponsibility there, in my opinion. So I'm saying that's partly to blame for home prices skyrocketing year over year in those couple of years during the pandemic. So this, to me, comes as good news. Even if the number is not 45,000, even if it's less, anything is going to help if we eliminate the fair weather agents. And again, I blame RECO as well. I blame the Canadian Real Estate Association. I blame the Real Estate Council of Ontario, Ontario Real Estate Association. A lot of these people just want, the fees for the realtors. the barrier to entry for our industry is next to nothing. If you can fog up a mirror, you can get your real estate license. That's the way it was. So until that changes, this crap is going to continue again and again. So if if interest rates start coming down and prices start going up again, we may see another influx of people just looking for real estate as a side gig, and just looking for a quick and easy buck. And once they figure out that you actually have to work in order to get paid in this business, they'll be out through the door, through the revolving door. So take this as good news, in my opinion. You have to be a professional here. You have to look out for your clients, and good riddance to those who don't want to do that. I mean that sincerely. So speaking of interest rates, I've been getting some questions lately. When will interest rates start to drop? And last month we saw inflation come down a little bit. It was 3.4% in December. Now it's dropped to 2.9% in January, which came in below expectations. The experts were saying it's going to be around 3.3%, 3.1 maybe, and it came at 2.9, which is great news for inflation watchers and interest rate watchers, because you may know that the Bank of Canada's target range is between 1 and 3%, right? So this came in at 2.9% in that range, albeit at the high end of the range. So there's a lot of optimism out there, cautious optimism, that interest rates may come down sooner than expected. A lot of people are talking about the summertime. A lot of people are talking about April, as early as April. I can't see it happening in April. It's definitely not going to happen in March, okay, because the Bank of Canada is not going to make such a decision to cut rates with only 1 month, being in their target range. They want to see, in my opinion, at least, consistency, month over month, that we're in that 1 to 3% range, and it's not going to go back up again. So I don't think 1 month is going to do it. The next interest rate announcement is due in March, and we don't have another inflation announcement before that, so it's not going to happen in March for sure. And there's only one inflation announcement prior to the April interest rate announcement. So again, 2 months, even if it comes in at 2.9 or less, I don't think 2 months is going to cut it for the Bank of Canada either. So I wouldn't hold my breath for an April rate cut. The next announcement after that for interest rates is not until June. Okay, so by that time we will have, if I'm not mistaken, 3 inflation or announcements or more. And if the rate continues on its path down, then by that time I think the Bank of Canada may indeed cut rates. But it's not going to be a huge cut. Rates always go up faster than they go down, right? So it may be a 1/4 point cut, something like that. And that's not enough, in my opinion, to get the market going again. We may see a slight increase in activity in the market at that point. But let's face it, there's still unaffordability out there. Home prices are still way too high for people. A 0.25% rate cut is not going to do it. We need it to come down to maybe a 3% policy rate, which will bring the prime rate to about 5.2%. Right now it's at 7.2%. Before the market picks up speed. And what I'm concerned about is if that happens again, then we're going to see a lot of FOMO kick back in, a lot of people jumping into the market when they shouldn't be, and a lot of this crap too. Where fair weather agents come in trying to make a quick buck. But regardless how it goes, stay tuned, and I will keep you posted on the happenings here. What's interesting about this inflation rate, though, the CPI, what they base the Consumer Price Index off of, that 2.9%, is based on a number of components. Food, shelter, transportation, et cetera, 8 altogether. So out of these 8 components, most of them came down. The only one that actually went up is shelter, right? So it jumped from 6% to 6.2%, right? Shelter costs include rent, and it includes mortgage interest, right? And those two are directly higher because of higher interest rates, So it's like a compounding effect, they increase the interest rates, mortgage interest goes up, rent goes up, inflation goes up, and now you're increasing rates even more to try to bring inflation down. So it's kind of like a dog chasing its tail. It's never going to end unless they start cutting rates. That's the only time they'll see these shelter costs go down. And the shelter cost is what's by far the one that's driving the inflation and keeping it high at 2.9%. Because food came down. Actually, went from 5% to 3.9%. Amazingly enough, because food was always a big issue for people, the inflation rate. So everything else seems to be coming down. Some are staying kind of flat, but shelter continues to go up, and that's directly due to interest rates going up. So I hope that answers your question. When will interest rates start to drop? In my opinion, probably not before June at the earliest, if everything continues down. I had another question. Are we out of the woods with yesterday's CPI coming in lower than expected? Okay. Again, similar question. I'm not sure what you mean by out of the woods, because I don't think we'll ever be out of the woods. We're real estate and the economy. There's always going to be a level of uncertainty there. Always an element of risk and an element of uncertainty in these markets, right? So we'll never be completely out of the woods, but in my opinion, once we see inflation starting to tame down for maybe 3 months in a row, then okay, things are starting to fall back in line, and interest rates start coming down. So there may be a sense of relief and normalcy coming in. But keep in mind that there's so much crap going on in the world these days. We've got wars, we've got invasion, we've got supply chain issues, we've got all these things. If something else happens, that's catastrophical for people. We've got, major storms and floods and, tsunamis and earthquakes. California just had an earthquake. We're probably just one catastrophe away from this thing turning around. The pandemic, who could have predicted that, right? We don't know what's going to happen. Now there's some other kind of virus and whatever going on, Alaskan flu or something, I'm not sure. But, we're always one of these catastrophes away from the market turning around again, right? So I don't think we'll ever be out of the woods. We always have to be cautious and safe and just, go with what's in front of us and go with what we know. And again, that's why you need professional guidance. I'm not saying listen to me, but listen to other experts in the industry, professionals who actually care about your situation, right? And they're not just looking to close a deal. Okay. Hope that answers your question as well. Let's move on to the stats. I mentioned off the top that the market was decelerating a little bit week over week. And it's nothing to be concerned about, in my opinion, because last week was kind of a little bit abnormal in terms of weather, right? We've been spoiled this year, in my opinion, this winter. We've had a relatively mild winter, not too much snow. It wasn't too cold. We had some balmy weather, actually, a few days that were in double digits. And then last week, for whatever reason, it fell. The temperature fell quite a bit. It was really cold out there. I think we had a couple of snowstorms as well. So I think that probably contributed to people wanting to stay home a little bit more. Nobody wants to go out in a snowstorm and look at houses. Nobody wants to go out when it's minus 10 degrees and look at houses, right? So I think that's why we saw activity slow down a little bit. We saw showings drop in Toronto about 5%. And in Peel region, it dropped about 1.5%. So that makes a lot of sense. And when there's fewer showings, there's going to be fewer offers. So offers dropped about 2% in Toronto and about 24% in Peel region. Again, that's a big number, but I'm not too concerned about it. If this continues week over week, then maybe there's something there. But 1 week does not a market make, right? So I'm not too concerned about it. Fewer showings, fewer offers. We had fewer sales as well. They dropped about 10% in Toronto and 21% in Peel region. But then listings dropped as well. So the inventory dropped, the demand dropped. So again, I'm not too concerned about it. The supply fell in line with demand. So a 10% drop in Toronto and about 3% drop in Peel region. But again, sales dropped about 21% in Peel region, so slightly more than the inventory. But again, a lot of that I'm sure has to do with the weather that we were having week over week. So I'll be curious to see what the numbers are next week and for the month compared to January. I'm sure they're much higher. And I'm sure at this point in February, we are ahead of where we were in January. So overall, the market is picking up. It's just that kind of hit a speed bump, so to speak, at this point in time. And maybe some people are waiting for the interest rate announcement as well. You know, we had the inflation rate come in lower than expected this week. So maybe some people are just holding on. Maybe buyers are holding off a little bit and saying, you know what, if interest rates drop, maybe I'll jump in at that point, right? So you never know. That could be what's happening. And as far as the other side goes, as supply goes, a lot of people are waiting for the spring to list their homes for sale, right? Nobody wants to list over the winter time. They're all waiting for the spring market. So it's going to be very interesting next few months and weeks to see where the spring market goes. An average price. This is interesting because it's kind of going opposite to what's happening in the market. The average prices actually went up week over week, which is a contrast from last week. They came down. So that tells me that perhaps more low-rise homes, higher priced low-rise homes, were sold within 1 week versus condos, thereby bringing the average price up. So again, we can't read too much into that, but I'll keep you posted, right? We'll have a better idea once the monthly stats come out of what's happening out there with home prices. Okay, I don't see any other questions. So before I go, I just want to leave you with, here's the most important thing I want to leave you with, okay? Buying or selling a home should not be overwhelming or stressful experience, right? I mean, certainly there's going to be a level of stress there, but it shouldn't be overwhelming, okay? The most important thing to keep in mind is to work with a realtor who is not only experienced and not only knows what they're doing, you know, but that truly cares about you and your family, okay? The agent you work with must truly care about your needs and not just look out for their own needs. Too many agents are focused on sales and ABC, always be closing, you know, and maybe that was the mentality of these realtors that left the business, right? Because they saw there was far fewer sales to go around, right? So when you work with an agent, make sure they truly care about you and your situation, right? They understand your situation so that they can help you through the process, you know, because, you know, moving into a new home is an emotional experience, right? And you need someone that's going to understand your situation and that's going to take the pressure off of you because, you know, moving into that next chapter of your life, you don't need that unnecessary pressure, you know. So that's what I'm taking from all this, you know, and that's what I'm sharing with you. So keep that in mind next time you want thinking of buying or selling a home, and you want to consider which agent to work with.